let's just examine these 11 sectors and see which one is still outperforming. So I think it's quite obvious. I just sorted this from the top down approach. So there are these 4 outperforming sectors so far. So why are they outperforming? So let's just take a look here. So the first one is definitely the energy, XLE. So I think from one look, you notice that it's a very straightforward uptrend, right? So straightforward uptrend, and if you compare to the rest, and I think it's quite straightforward. So there are only 2 key things, 2 key elements that when we examine the outperforming sectors. So the first one is definitely the very obvious, which is the price structure. So we look at the price structure. So this is a price structure, and the second is relative strength. So we need to check the relative strength. And the relative strength that I'm using it here is just benchmark with the S&P 500, which is just like a broad market. And so far, I think it's a good benchmark because it's still the strongest or the most outperforming index if you compare to Dow Jones, compare to NASDAQ, compare to Russell. So if you still stronger or outperform than the S&P 500, then definitely this is the strong sector or the outperforming sectors we should be focused on. Okay, so one look. So this is just like using XLE divided by S&P. So divided by S&P 500, and then you'll get this chart here. Okay, so it's very straightforward calculation. So this is just a very normal indicator like the relative comparative strength. You can definitely change it to any other benchmark that you would like to use, to see, to analyze. But from here, you can tell this is January this year. We started to see this relative strength is just trending upwards. So it's just trending upwards means that start from this year, January, XLE, this whole sector already outperformed S&P 500. But you also notice that I think we definitely get a sort of like a buying climax right here and correspond to this point and start from there, and it's sort of just kind of similar to the S&P 500, not really beating the S&P, but it's not a laggard as well because it's kind of flat here. So while it's consolidating here, forming a triangle, which is a bullish looking, and we definitely see that I think is still kind of showing resilience. And second is the XLP. This is the consumer staples here. So first, let's check out the price. I think this is pretty much break the recent swing high, if not the all-time high. So you can definitely tell that this is a low, higher low, high, higher high. So we are still in a lower, higher low and a higher high environment. So uptrend. And I think this is pretty much the breaking the recent high or the all-time high, and which is a very constructive sign. And in terms of the relative strength, since December last year, is forming a high low. So this is uptrend, but it's sort of just kind of flatten it here. But from last month, and I think in during the rally in March, there's sort of still coming back up again. So there's a revival here from the index, the relative strength index, also showing trending upwards. And if you just look at the utility, I think this is kind of very extended run. So especially this recent run up here. So this is a very extended run, and definitely I think it's late to chase. But just right after it just break above, so it's sort of forming first attempt to break out, and then a small routing here, and once it's break above here, it's just quickly run up. So a lot of the utility stocks also just fly. So utility sector is also outperformed since December last year. So you can see that this is kind of the lowest point right here, and then since December, we definitely get a uptrend in the relative strength right here, and is still outperforming at the moment. So this one is healthcare, XLV. So XLV is sort of, I think, breaking its previous high as well. I think this is also the all-time high level. So we got a very good structure, and also in terms of the relative strength, I think since December, this is the low, and then throughout we got a high low. This is trending up, and so still outperform the S&P 500. So I think these four sectors definitely have a lot of the stocks that are really outperform the stock market, and those are the stocks that we need to focus on. So out of these four, three of them are defensive. So consumer staples defensive, utility definitely defensive, and healthcare also defensive. So these three are the defensive sectors. So traditionally, when you see the market is going down, consumer staples or utilities. So these are two of the defensive sectors, and also healthcare as well. So these three are definitely the defensive sectors traditionally, but XLE is definitely not. This is a cyclical sector, and I think we are definitely into a team that's commodity is outperforming the stock market. So definitely pay attention to the commodities, not only the XLE but also XLB as well. But from here, you can definitely tell that these four sector ETF are also very strong, all-time high, and definitely is the one that we need to focus. So next one, if we compare the material, real estate, industrial, and also finance, we can see it right here. So this is material. So this is XLB. So material is sort of still in a big trading range. This could be a reaccumulation, but in terms of the strength, relative strength, compared to S&P 500, I think since November last year is still trending up. So I think this is a good sign. And I think in terms of the recent pullback, although it did not really go all the way up and break all-time high, it had a pullback similar to the index like S&P. But I think that could be a constructive pullback if you can just turn up from here, which is sort of having this double tweezer here. So maybe a kind of a spring. So commitment below, hopefully you can just stay above and then break this previous swing high, and then the previous high again, reach an all-time high level. Then I think XLB would be looking very bullish as well, because in terms of the strength, it certainly is beating the S&P 500. And a lot of the miners like gold miners, silver miners, and also the precious metal belongs to the materials sector as well, and even the steel as well. So definitely keep an eye on the material. And real estate is also kind of well, defensive, I would say. And you can definitely see that well, in terms of the structure, is probably still a lower high. So this is high, and it's still a lower high, but it's probably will take some time to catch up. But this is slightly outperforming the S&P 500 since December last year, and almost flat, but we got still a higher high and higher low here. But this is really a low beta ETF or stocks for this sector, the real estate sectors, because the REITs are generally just income generating, not really so much about the growth, the capital gain, but still the stocks are still going up. And these two sectors are not looking very well. XLI is the industrial. So industrial and also the financial are not looking that good, because if you just purely compare the structure, it's still very much in a trading range, and also the pullback recently is a lot weaker. So this is a shallow pullback, while this is a deeper pullback, and this is even deeper in and almost testing the previous low. So finance is not looking good, and industrial, I think we definitely need to see different group as well, because some of the groups are really outperforming, but some or most are probably still laggard. Okay, so in terms of the relative strength, you can definitely see that since January this year, so this is the low, and this is pretty much just back to the low again. So this is the January low, and now is sort of forming a routing top and coming back again. So this too is not so much of interest. So I still believe that the first six, the top six, like material, real estate, plus the previous four, the XLE, XLV, and XLPA, and also the other one is also the outperforming sectors. So the last three, so these are the laggard. So these are the lagging sectors. So the technology and consumer discretionary and also the communication. So if you look at the chart here, so this is technology XLK. So very much, I think since maybe December. So since December last year, we already see that the price has been going down. So it's sort of in a downtrend already. And similarly, the relative strength also shows that is really is lagging behind the S&P 500. It's just a downtrend line here. Okay, so this is a downtrend. And for the consumer discretionary is also very similar to XLK, the technology. So very much downtrend, and also downtrend in the relative strength as well. Although during the March rebound, it sort of still bounce up here, so bounce up here, but I think it quickly just fade its strength here. So there's a big reversal. It's still coming back. So communication is probably one of the weakest, or if probably is the weakest if I remember correctly. So just way before December, I think you already show some of the weakness ahead, and followed by just a downtrend. And in terms of the strength, the relative strength is also lagging behind the S&P. So it's a very straightforward downtrend. So these are really the lagging sectors. So definitely not interested to touch it because of the sector rotation, and a lot of the money also just flowing out from these three sectors. So especially the tech sectors, while a lot of the smart fund, big money, they just unload their stocks. So they use the fund that after they sell their stocks from the technology sectors, the growth stocks, then they rotate back to the value stock, the cyclical stocks like the energy sectors, the consumer staples, the utilities. So this is how the sector rotations is unfolding, which is currently still unfolding. So that's why during this period is very volatile and very hard to trade as well. But still, if you focus on the right sector with the outperforming stocks, I think it's still manageable. Okay, so these are all the sectors, the 11 sectors in the S&P 500. So after this, usually that I will still be looking at individual industrial group. For example, like in the XLE energy sectors, then I will probably looking at maybe some of the oil and gas and some of the drilling. Some are the coals, and some are different kind of the individual groups. So then you can drill in and then dive in to find the stronger stocks, the outperforming stocks, and with the right structure. So for example, I think even this XLE is sort of forming a very good structure. So consolidate, very shallow pullback, and on Friday it's sort of breaking out. So a lot of the stocks are showing similar behavior as well. So focus on the XLE. So the rest of the sectors like consumer staples, and probably you will find that Kroger, SFM, those are in the foods, or even the Walmart, Costco. So the consumer staples are also very resilient. So I think it makes sense. This sort of the defensive sectors are doing well, especially during the market downturn, because a lot of the companies that they will still just have the business as usual, or even the people won't be able to just abandon their business, because they still need to go to the market to buy the groceries, things like that. And on on the opposite side, if you think about the consumer discretionary, the XLY, those are the stuff that they probably can sacrifice. So that's why you see that the XLY is not doing well. So in fact, is also the lagging index. So this is the XLY. So I think it makes sense from the fundamental point of view.